The announcement of the Mexican tariffs, I think, really sent a shudder through markets worldwide. Not so much because of Mexico, although that is really important to the United States, but it said if they're going to go after Mexico because of a border issue with immigration, then no one's safe. They could impose tariffs anywhere, anytime for some dispute.
Absolutely, and I think it was interesting that actually it was when the Mexico announcement came out that you saw the kind of the rush of people to start announcing that they're forecasting Fed rate cuts and maybe increased chances of recession. The Mexico thing, as you said, it's not that Mexico is really that significant for global growth, but it implies that nobody is really safe, and tariffs can be used for other wars which are not necessarily only about the trade.
So what is the potential dip for the S&P? We stable today, but how low can we go then?
I think at the moment, I mean, I couldn't possibly put a number on it. And one of the reasons I say that is if you look back to last October and since then, one of the main drivers of the speed of movements has really been sentiment. So market sentiment at the moment is a key driver of the kind of the magnitude of moves. And that's partly because the echo chamber within markets is so great. So I think that there is certainly downward pressure for markets further from here. How far it goes, though, is when I've been speaking to people over the last 6 months, the number of people who fail to get in on the market rally since January means that there have been hordes of people standing on the sidelines waiting to put their money to work. I asked them, what is it that you're looking for? Will it be just a small correction or something? As long as they don't see a recession, they want to put their money back to work. So I do think there's going to be a correction. I don't think it can be particularly deep or sustained as long as recessionary risks don't become very abundant.
And how important is the U.S. consumer to that? Because we have not seen the U.S. consumer really back off yet. And is that somewhat of a bulwark against things like trade disputes, about regulatory issues?
Well, as you said, the U.S. consumer has really been the strength behind the U.S. economy for the last few months. And actually, when we look back to even about 2 months ago, when we thought that the trade war would be resolved, it looked like the U.S. had a lot of downward trends coming through from delayed impact from the Fed hikes, the sugar rush from the tax cuts coming, starting to fade out. All of that was going on, but the U.S. consumer was keeping the U.S. economy up. Now, as you continue to see increases in consumer prices, then I think the U.S. consumer is at risk. And then, again, it's kind of like the tech side. What else is there to keep the U.S. economy going?